What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, home of the #1 stock market trading and investing channel on all of YouTube. In today's video, we're going to be talking about all things short selling. We're going to talk about why it's gotten a bad rap over the past couple of weeks. People have attacked short sellers and the process of short selling. And we're also going to talk about how you personally can short sell stocks, how to do it, and why sometimes it makes sense. And yes, short selling has gotten a bad name as GameStop was attacked by a bunch of greedy suits in Wall Street who short sold the heck out of the stock. More than 100% of the float was sold short, which is just dirty. But short selling doesn't have to be dirty. It's not a bad concept. You think a stock's going to go down, you short sell it, you buy it back at a lower price, and hopefully you make money. The reason it's gotten a bad name is because these big hedge funds who are attacking these dying companies and hurting the shareholders of these companies, they don't care. They're greedy. They don't care if they're hurting an average investor or not. They're just greedy suits driving their expensive cars, living in their Manhattan penthouses, and they don't care like the average investors like us. But us, as the average retail investors and traders, we can also partake in short selling, and there's absolutely nothing wrong with it. So in today's video, we're going to talk about how to short sell stocks. Let's get it. Before we get started, guys, check out the link in the description for Webull. My preferred broker is offering the Touchdown Trades community 4 free stocks valued up to $3,700 when you use the link in the description. That is free money. Also, if you want to come trade with me and get my buy and sell orders in real time, there's a risk-free trial to the private Discord chat in the description as well. Check that out. First, let's talk about the concept of short selling. Then we're going to talk about why it's gotten a rough name and why people have kind of talked bad about short sellers in the past couple of weeks. And then we're going to talk about how you personally, even if you have a Robinhood, a Webull, a TD Ameritrade investing account, you can also short sell stocks. It's not only for the rich hedge funds, you can do it too and make money doing so. So short selling, let's do a quick overview of what it means and how you do it. So you have a stock, you think it's going to go down, we'll call it ticker XYZ. So ticker XYZ, you think that stock is too expensive and it's going to go down. So what you can do is you can go to your broker and borrow shares of XYZ. We'll say 10 shares. So your broker gives you 10 shares. You now take those 10 shares that your broker let you borrow for maybe a small fee, let's call it 3% a year, and then you sell those shares to the market. So you sold them, let's say at $100 a share, and then ticker symbol XYZ drops to $80 a share. You then made $20 per share on that short sell. You buy it back from the market and return it to your broker. That's basically how short selling works. So your broker's letting you borrow a certain amount of shares for usually a small percentage fee on an annual basis. And then if the stock drops, you end up having to buy those shares back, return them to your broker. But the problem is, if the stock goes up instead of drops, you still at some point have to return those shares to your broker. And that's why short selling can be more dangerous than buying stock outright. What's the worst thing that can happen when a stock drops on you that you own? The most you can lose is 100% of your investment. With short selling, the most you can lose is infinite. It's literally infinite loss potential. Because if you short sell a stock at $1 and it goes up to $1,000, you're down $999 per share on that short sell. And that stock at $1,000, it can keep going up and up and up, and there's no cap on the amount of money you can lose from short selling stocks. That's why short selling is thought to be more risky than just buying stocks. And I agree with that. I recommend people who are new to trading and investing don't even attempt to short sell because number one, it's riskier because there's no cap on the amount you can lose. Number two, the stock market goes up over time. That is a fact. Look at this S&P 500 chart that I have pulled up right here. We can see over the last 10 years, yes, we have pullbacks in the stock market right here. We had a pullback in 2008. That was the 2008 crash right there. We had the 2015-16 pullback. We had the Rhinoceros Rex pullback. But over time, we can see that the stock market trends up. Most companies are going to follow the stock market's trend. So it makes more sense for newer traders, new investors, to just buy and own stocks longer term because you're following the trend, and over time the stock market is going to go up. But there is exceptions. If you think a stock is overvalued, you should be able to short sell that stock, and it's a good tool to have in your arsenal of investing and trading. First, let's talk about how to actually place a short sell order with your broker and how to short sell stocks. Then let's talk about a couple different strategies that I personally use when short selling stocks. So most brokers, even small brokers like Webull and Robinhood, are going to let you short sell stocks. TD Ameritrade, Fidelity, E-Trade, they're all going to allow you to short sell stocks, and some newer investors and traders don't realize this. So here on my Webull platform, let's use Apple stock as an example. I'm not saying I think Apple stock is going to go down, but we're just going to use it as an example. Say we think Apple stock is about to drop to $110 per share. It's currently trading at $130 per share. So what we would do is we would go over here to the order entry window. We would click short sell right there, and we would enter just like we would a normal order. Say we want to buy 100 shares we want to sell it at 130. Say our limit is 130. And then you put in the order and it goes to market. And when you get filled, remember, you owe your broker back 100 shares of Apple stock at $130 per share. So remember, once that order is filled, you owe your broker back 100 shares of Apple stock. Doesn't matter what price it goes to, you have to give those shares back. So let's go over a couple examples real quick. Remember, Apple's trading at $130 when we get filled 100 shares. So we have 100 shares short at $130. We think Apple's going to go to $110. If that happens, our profit is $20 per share. We then can buy it back and return it to our broker. If Apple goes to $150 per share, we lose $20 per share. We still got to buy it back and return it to the broker. The reason stocks like GameStop made this insane move from $20, even less than $20, all the way up to over $480 a share was because these selfish, greedy hedge fund managers were getting so short this GameStop in this area here. Every single share of this company was sold short. So there was very, very, very little supply. And remember, the stock market is still a supply and demand thing. When the supply is very low and the demand is very high, what's going to happen? That stock's going to go up. And that's exactly what happened in the case of GameStop. So everybody's short in this area. Then the Reddit Wall Street Bets community says, hey, the fundamentals have changed, or we just want to squeeze these hedge fund losers. And they started buying GameStop. The supply was extremely low. The demand was extremely high. The stock started going up. What happens? The short sellers are down a bunch of money. They have to cover in this area right there. It creates that massive squeeze to the moon, and that is what is called a short squeeze. And we want to be careful of short squeezes. If we are short selling a stock, you absolutely do not want to be short selling stocks with a high short interest. So how do you check short interest in a stock? So the way I do it is I just use FinViz. We just checked on Apple stock. We were going to place a short order on Apple. In our example, you can look on FinViz right here. The short float is 0.6%. I have a rule in my personal investing that I will not short sell a stock that has more than 10% short interest because I don't want to get stuck in a GameStop style short squeeze. We saw GameStop short squeeze. We saw AMC short squeeze. We were in this AMC short squeeze in the private Discord chat. You should come join us and trade with us. We also were the first ones to call this cost. It went up to $120 per share. I called this out in the private Discord chat under $4 per share. This was a massive short squeeze. The short float at the time was like 40%. Right now, it's at less than 1%. Why is that? Because everybody who is short under $4, they bought out, they got stopped out of their position. So my number one rule with short selling stocks is to not short sell stocks with high short interest. You don't want to get squeezed. All right, so when I'm buying stocks, when I'm investing in stocks, just buying them, looking for them to go up, you guys know I love to buy strong stocks that are trending up and that are pulling back into support. Buy that dip and then look for the next move higher. Strong stocks, the trend is your friend. Look to join the trend, buy the pullback, sell the rip. So when short selling stocks, it's no different. I still want to join the trend. I'm looking for weak stocks that are bouncing. They're popping up into resistance. You get short in that pop, and then you look for it to roll back over, break through that prior low, and head lower. So we still want to be joining trend. We do not want to be looking for the top. You don't want to be shorting strong stocks, looking to pick the top, because that's how you get in big trouble. And when short selling stocks, you absolutely have to stick to your stop loss, because remember, your risk is unlimited. You have unlimited, infinite risk. There is no cap on the amount of money you can lose when short selling stocks. When buying stocks, your risk is capped at 100% of your investment. When short selling stocks, your risk is infinite. So I have a simple scan for finding short selling for stocks that I'm looking to short sell. We're going to put in performance. We can put in quarter minus 20%. Remember, we're looking for weak stocks that are bouncing. So we can go weak, up. So the stock is down 20% on the quarter, but it's bouncing. It's up on the week. And then we don't want to be shorting heavily shorted stocks. So the short interest under 15%. And that's going to give us a few tickers. And I like the looks of this SWI, Solar Winds Corporation. I don't have any idea about the company. Just looking at the chart, just looking at the technical side of things, we can see that we were in an upward trend. We were in a pretty steady upward trend for about a year. We broke out of that upward trend to the downside, and now we have bounced back up. We have resistance right here at the 1850 area, and that would be your risk. That 1850 resistance would be your risk. You'd be looking to get short in this area, and then you'd be looking for it to roll back over under these prior lows. That is a simple strategy that I use to find good stocks to short sell. Now, another way you can do this is by using options, and it's a much, much, much safer way to go. And that is selling vertical call credit spreads. We can use GameStop as an example. For example, if you think a stock is going to be weak, it's going to go down, or even if it's going to be neutral and just consolidate for a certain amount of time, you can use a strategy called selling call credit spreads. For example, GameStop, if you think it's just going to chop around or go down, you could sell the $400 call, and to protect yourself, to limit your risk, you could then buy the $420 call. So let's say the $400 call you sold for $5 per options contract. The $420 call you bought for $3. So you made a credit of $2 or $200 per contract. So you keep that credit right there as long as the stock that you sold stays under the strike price that you sold it at. So if GameStop stayed under $400 per share until the time of the options expiring, you would keep that credit of $2 per contract. Let's say GameStop rips up through your calls, that spread right there, you would lose money on that. In this particular situation, you would lose a bunch of money because you have that wide $20 spread in the two contracts. But it's much safer because your risk is limited. That top contract that you sold caps your risk. Short selling has gotten a bad rap over the last couple of weeks due to the people who were participating in dirty short selling. They took advantage of GameStop, a company that was hurting. They were trying to hurt your average retail investor, and that's not right. I agree. The suits were wrong in this situation. The hedge funds were wrong, and it's funny to watch them squirm. But you shouldn't think that short selling is this awful tactic that only the big hedge funds use. That's absolutely not true. And I think if you can add it to your arsenal, you can become a better trader and investor. So just some food for thought. AMC as well. AMC was heavily shorted all through this area. So as it got some momentum to the upside, what happened? The short sellers covered, creating a squeeze. Short selling is not a level playing field either. Different brokers are going to have different stocks available short. Every stock is not going to be available in your broker's short list. So these hedge funds do have an unfair advantage in that aspect as well. GameStop stock was not available to short in any retail broker's list. It wasn't available in Webull, Robinhood, TD Ameritrade, E-Trade. None of the big brokers had GameStop available to short. But somehow the hedge funds were able to short 150 or whatever % of the stock. That's another reason why it's not a level playing field. Same with AMC. None of the retail brokers had AMC stock available to short. So you're going to have to check with your broker if you think a stock is going to go down and you want to short sell it, if it's even available to short, because some stocks are not going to be available to short. A lot of times penny stocks are not available to short. So remember, there's nothing wrong with short selling. Take a look at it, see if you want to add it to your investing and trading strategy arsenal. Remember that getting stuck in a short squeeze absolutely sucks. So maybe stay away from high shorted stocks. I hope you guys got something of value from this video. If you did, hit the like button for me. If you're new to the channel, hit the subscribe button. Check out the free trial to the private Discord chat where you can come trade with me and hundreds of new and experienced traders and investors. I'll catch you guys in the next one. Until next time, peace.